Hi, everyone. Having recently launched a service to let people see outstanding stock selections from essentially the top hedge fund managers, I thought it'd be quite good to share some of those thoughts and some of the things that I'm looking at with people. And you can sort of see it there. And I've done a collection of both what I call special situations and non-special situations. And they're not the only ones. There's quite a bit of sort of really good quality picks from some of the leading hedge fund managers in the world. And what we've gone for is which have delivered 40% per annum for at least the last 3 years. Okay. And which funds manage over $1 billion and hold at least 5% in a particular stock, and projected forward, can that also continue delivering 40% if you were to project that forward? And equally, can you get a very tight, what might be called a stop loss, so that you know very quickly if you're wrong, so the downside risk is very limited. Okay. And I'm going to be doing a series of videos depicting that, showing that. So I wanted to share that with people. Not least because what you discover when you do that is that it's incredibly popular. Because what it does is it goes beyond just dumping a whole load of names of stocks from various hedge funds. And I'll give you an example of the kind of stuff we're looking at. So here's what, let me zoom that up a bit. Okay. And what that did instantly for us is to be able to show people, okay, this guy's got 1.4 billion. He's generating 53% per annum. Okay. And you can see it compared to the S&P. Well, what stocks, which stocks does he own? Are those stocks worth getting into? And the way we analyzed it was they had to still meet some certain criteria. So we didn't just say, oh yeah, hedge funds got it, great, wonderful, let's just go with it. They really had to go beyond that. And we analyzed them. Are they undervalued? Are they good growth? And so on. And this has been a piece of work that I've been on. I guess it's been a project for me for a long time, but it's only now that the technology exists as well. Okay. Do feel free to ask any questions of any of this as well. And because it exists, the technology to speak to you like this and let people know, the data from the hedge funds, the ability to do the analysis quickly. I mean, you've always been able to do videos, but the ability to turn those videos around like now, live stream it on YouTube, means you can reach more people than ever. And it's been something worth pursuing. And those are returns, I think, which are worth pursuing. So it's something which I'm going to continue doing. I think by sharing that knowledge with people so they can hopefully improve their own returns and can ride the coattails of some of the best brains, some of the best companies that those best brains have invested in, well, that should lead to some degree of hopefully social mobility. I mean, think about it. 20 years ago, you could buy a property, you worked hard, you borrowed some money from the bank, the property went up, you were socially mobile. You got a fairly good education, you got a job, you earned some income, you're socially mobile. Those routes are getting closed down. The financial crisis meant that, well, you're going to need a lot of money in order to buy that house to be socially mobile. And education, the amount of debt that you're left with, again, social mobility is damaging that. One of the places which they haven't shut down yet, but I'm sure they will find ways of doing it, because any place where people who are not well off can make money usually gets shut down by governments around the world, is still being able to invest in stocks. I mean, they've certainly cut down the ability to buy your own property, your own home, buy to let, thanks to taxation, all sorts of other problems. You need a lot of money, so the rich continue getting richer. But at least, hi Pradesh, but at least with investing in the stock market, they haven't yet managed to cut it down. There's even tax breaks, 401ks and all the rest of it, ISAs, SIPs. So what if we could take the best brains, let's assume some of the biggest hedge funds which have generated 40% per annum are some of the best brains, like this one, let's take. See what they're investing in, see if those projections work, see if we can put a tight stop loss so we're not risking too much money, and just copy their ideas. This goes back to something that I did. When I was a kid, I used to write to companies and ask for their annual reports because you could get them for free. They would just send it to you. And I think the stock market, the London Stock Exchange used to send it. So I'd look at these annual reports and read about these companies and learn all the great things they did. And it just occurred to me, well, why don't I just copy making money from how these companies are doing it by just simply investing in them? And that's made all the difference. And in 2004, I launched my hedge fund. I guess that was the inevitable consequence of all of that. But that's what we're looking for. What I want to do is be smart enough to get hold of the data and then pass it to you guys. I'll do it on YouTube. I'll do it in other channels. Smart enough to pass it on to you so that you can make use of it. There'll be some degree of social mobility as a reason, as a consequence rather, because you've got your hands on it. And all of these things should make a big difference to people's lives. I have something called the Campaign for a Million, which is to teach 1 million people how to invest better and add an extra million into their pensions across their lives. Okay. And the Campaign for a Million, by adding 1 million across the lives of 1 million people worldwide, because thanks to technology, you can do that now, that should result in $1 trillion added value. Guess who's going to use it? It's not going to be the richest people in the world. They've got Goldman Sachs managing their money. You know who's going to use this? It's going to be the regular people who want 1 million in their pensions. So great. That's how it should be. Thanks to the internet, thanks to videos, and thanks to all of these things, you can actually teach people for free how to invest better. And I gave people, to prove the point, a free copy of my international best-selling book, Investing Unplugged. It's got great reviews from hedge fund managers, published by Macmillan, so a proper publisher. It's one of 18 books I've written. The others are published by the likes of the Financial Times. And because I've had access in my life, I've been lucky enough that Mark Carney, when he was the governor of the Bank of England, to some rather exclusive, talented individuals from whom I've learned a lot, I thought, well, why not share this? And that's the idea with it. And give people a free copy of my book, Mind of a Trader, published by the Financial Times. Free trading classroom, teach people about trading, more importantly about investing. I think most people should be looking at investing rather than trading. And that creates impact, social impact, because I'm spreading education. It's a hell of a lot cheaper to teach people how to fish than give them a load of fish. And when you get to my age, you want to have something which is purposeful and impactful, and that's what this is. So that's sort of behind the point of having set all this up, was that to make sure people had these tools at their disposal. And I guess one of the reasons for it is, and by the way, I write a lot of blogs and show you and explain to you why and what you should do. There it is. It's summed up there, because the rich and powerful should not have a monopoly on knowledge. And by sharing the knowledge of what are the biggest hedge funds doing, for instance, which are generating the returns, because we don't have a monopoly on knowledge. We're not necessarily going to be the only ones who can generate great returns. Maybe other fund managers who manage more money than us are going to and got better returns than us are worth looking at. Of course they are. And that's been our philosophy. We don't have a monopoly on the best ideas. And so that's me, by the way. And so the idea with it all was to share that with people through the Campaign for a Million. You can see the URL up there, Campaign for a Million. And spread that knowledge for free so we can help people do that. So my updates on YouTube and value starting to do the live stream. Yeah, it's the first live stream I've done in ages. Thank you very much indeed. No, I appreciate it. I love playing around with technology. So if you've not got a free copy of the Investing Unplugged book, it's there. We've also got market insights from instant messages and a whole load of free services. And I guess the problems we wanted to solve were fund manager experts who underperform, people like Woodford, who I publicly humiliated in a competition over 12 months and outperformed him in the market. The underperformance of active fund managers, because they're so conflicted with counter interest, but also this. UBS rich clients get Goldman PIMCO strategies with no extra fee. Excuse me. Well, what if I give you them for free on YouTube and vet them? And not just with the hedge funds, but actually we're doing it with the biggest banks as well. Well, wouldn't that be something to do? It certainly makes me happy to be a bit disruptive. Rich and powerful have a monopoly on information and knowledge, and we want to cut that. We want to reduce that. And we know companies like St. James's Place overcharging, and it's leading to people basically, because they don't know what to do, not investing. And we want to educate more people to do it. But there's other reasons for it. 65% of people believe that they're not saving enough for long-term plans. 31% often feel their finances control their lives, and so on. It leads to mental health problems. We know this data because the data's come from the research from the Center for Economics and Business Research, Money and Mental Health Policy Institute, Brewin Dolphin. So there's a lot of problems which can be solved if you help people learn how to make money. Okay, 15 times more likely to have sleepless nights if you're not on top of your finances. So what we did is make all of that more readily available. These are some of the past and present paying clients. You don't all have to pay. It's all available for free. But yeah, that's why I launched my Campaign for a Million, for that reason, to make sure that it was available widely to people and to ensure that the ability to be socially upwardly mobile by learning how to invest is not gone. And that social mobility thing is important to me. I was born in Leeds. I was born in Armley and went from there to setting up a hedge fund several years later. It was important. I don't have a view on yen at the moment. Can you comment necessarily today we'll stick with the 4% rule when the S&P has delivered 10.5% on average since 1957? You're absolutely right. The 4% rule about withdrawals from pensions is dated, and it's not without controversy. And I'll probably do a follow-up article about why it is somewhat outdated. And I think the latest column I wrote on that did allow for the fact that, of course, if you're expecting greater gains, and by the use of 10.5%, over the last 10 years in sterling terms, it's been 15% per annum. There you go, for social mobility. So yeah, I'm delighted to sort of talk about it, and it's been launched. I didn't want this live to be too long, not least because it's quite late and I've had a long day. But yeah, I was really excited to be able to discuss that we're launching this. Hedge fund managers who've returned over 40% per annum for the last 3 years, got $1 billion in assets under management, hold at least 5% in specific stocks. We look at those stocks to see if 40% is a reasonable target in 12 months, and preferably if they meet other targets of ours. So you're going to see more of this, where we'll then go through these specific managers, getting 40, 50% per annum for at least the last 3 years, look at the stocks they hold and see which ones still look attractive for being undervalued, good momentum, good sortinos, and those kinds of things. So we will look at those aspects as well. If you look at my Campaign for a Million, you'll see a load. I just want to see if on that article that I wrote in the blog, the Campaign for a Million one, this one, on the 4% rule. Yeah, you're absolutely right. You could increase the withdrawal rate, and the probability of success won't depreciate if the rates of return increase. It is a very conservative rule. And one of the reasons it's quite a conservative rule is it's old and hasn't kept up with market growth. But also think about it. If you're going to do one of these things, although this is a 2020 article, and there are those who are now saying it's not safe in a low yield world, you're going to want to play on the conservative side. So yeah, you could probably, if you're getting better returns, do more than 4%, or do 4% with less money. I don't know New York Corp. Like I said, I want to keep this short, just 15 minutes for now. Have a look at the campaignforamillion.com if you want to see more. There it is, of the free resources. But like I said, keep an eye out on this channel. Do subscribe and like, because we're going to be revealing more hedge funds who are returning over 40% per annum, and look at some of the stocks. Do keep aware of the warnings, though. It is not individual financial advice, because I don't know you individually. Past performance does not guarantee future returns, and capital is at risk from investing. And those are serious warnings about investing, of course. Okay, so please do bear those things in mind. Thank you all for listening. Like I said, I wanted to keep it short and sweet, so I really appreciate it, and I hope to do more live streams with you in the future. Thank you.